Hi, this is Evan Hutcheson, and today I wanted to briefly go over what auditors from the IRS are looking for primarily when they are auditing trucking companies. Of course, sometimes there are some glaring issues that cause the audit, in which case the auditor is going to specifically look at that issue. But in general, I'm going to go over just a few items that they usually take a look at. One of the biggest ones, and I'm talking about any trucking company, whether you're a private carrier or a common carrier or whatever, just a general freight carrier, one of the biggest issues is the employment tax issues. Now, here's an IRS link that kind of goes over whether or not someone is a contractor or an employee, and it gives some examples and rules and so forth. But anyways, this is just a lot of these drivers that are independent contractors, depending on what they do, might be liable for employment taxes, and they should be an employee. And the IRS is going to look at this. The auditor is going to go in and make sure that these drivers should not be employees, and if they should be, they're going to file some back taxes on you for all the employment taxes that you should have paid in the past. They're also going to look at lumpers and swampers and different cargo handlers to make sure that they too should be contractors if they are filed as contractors. Now, this isn't as big a priority for them as the drivers, but they will usually look at this too. And while we're talking about employment tax, so look at the supplemental wages that everyone's making and just make sure that the pensions, vacation pay, bonuses, they're all included as wages. Now, with excise tax, that's another thing that the auditor is usually going to look at. And the big one, of course, for trucking companies is the Form 2290. This is the form right here, and it's most of you are probably familiar with this, but it's for anybody that owns a motor vehicle weighing more than 55,000 pounds. You're going to have to file this. So most trucking companies are going to have to file this, and it's not that complicated of a form. I mean, it could look intimidating if you've never seen it before, but once you kind of go through the instructions, a lot of it's pretty simple. That's the main excise tax form. Another one is if you purchase glider kits for a truck, you're going to be required to file some sales tax, some retail sales tax, and that's on Form 720. Now, not every trucking company is liable for that, so that's not as big an issue usually as the Form 2290. Some other things that the the auditors are looking for are sales of fixed assets. They want to make sure that if you sold fixed assets, they are being reported on your taxes. So they're going to look through your statements and make sure that there aren't any big lump sums of something coming in that they think might be for a truck or another piece of equipment. And they want to make sure that depreciation of assets that are no longer owned by the corporation is not current. They want to make sure that there is no current depreciation expense of any assets that you don't own anymore. And they also want to make sure that repairs and general maintenance the account on the tax return does not include pieces of equipment that should be capitalized, like computers or radios, things like that. So they're going to look pretty long and hard at your fixed assets and your repairs and maintenance account. Another thing they'll look at is your customers, their credit balances, their overpaid accounts, their unapplied cash receipts. They're going to look through all this to make sure that you don't have any income that you should have reported that you did not. But back on the subject of the fixed assets, they want to make sure that the basis of these assets are also calculated correctly. So they want to look to make sure that if there were transfers between related parties, that they were recorded at at an adjusted basis at fair value. They also want to make sure when you purchase an asset that it is, if there was interest that you paid, if you're financing it, that's not being included in the capital, but you can actually take an expense for that anyways, so you don't need to include that in capital to get any tax benefit. You can always take the interest expense as a deductible expense when you're financing equipment, but they want to make sure that you're not putting it into the equipment for a larger fixed asset purchase. And they're going to look to see if you traded in any old trucks or anything like that when you purchase assets to make sure they're also taken into account. They're going to look at your meals and entertainment. Invariably, they'll always look at meals and entertainment just to make sure that you're capturing the 50% non-deductible amounts. And they'll also look at penalties. A lot of trucking companies deduct penalties, whether they're traffic violations, custom duties, federal penalties, whatever. A lot of companies deduct these, and the IRS, the auditors, know to look for that and make sure that you're not deducting them, because penalties are not deductible if they're paid to a governmental agency, which includes all the traffic fines. So this is publication 535 from the IRS, and it goes over that long, kind of in detail, these penalties that aren't deductible right here. And if you are leasing equipment to, if you're leasing equipment from a shareholder, they want to make sure that it's at fair market value, because if it's not, you can pretty much come up with disguised dividends that pay money from the corporation or the entity to the shareholder for an amount that doesn't quite equal what the value of the equipment is. And then they want to make sure that, of course, there are no kickbacks from any of the vendors or anything like that, because that, of course, is highly illegal. And that in summary is kind of the main things they want to go over. But of course, like I said, if they're auditing you because of a particular amount that looks extremely out of place on the tax return, they might just look at that amount and nothing else. But hope this helps out a little bit, and I hope you can try to figure out good ways to make sure that you don't get audited in the first place. But if you do, just be aware these are some of the things that the IRS is consistently going to view when auditing trucking companies. Hope you have a good day. Thanks a lot. I look forward to talking to you soon.